Price action is representation of price movement, and every single candle on the chart tells me a story and what are the intentions of all the market participants. As a price action trader, I'm relying on price action rules to help me with my analysis and to help me navigate the markets to identify high probability setups. As you can see, I already drawn channels on the chart. That's because every single move on the chart is always contained by a channel. Right now, the trend line will apply with the break, new extreme, and price action pushed lower, and you can see we had a spike up, and now price action is going more sideways, which means I'm trying to project possible trading range for the time being. So I'm going to focus right now on this bearish leg working lower because I need to locate the channel. So what I'm going to do, I'm going to draw a channel like this, and right now the bias and what's going through my mind is this downtrend. If we close outside, I want to see new extreme tested following the trend line rule. So we can see price action is correcting a little bit. We have a significant break outside. We have a tiny little break here, but this is so insignificant I can very well just make it a little bit wider. So right now we have a close outside. I expect for price action to create a new extreme, but I cannot just sell yet because I want to sell a high probability setup at the key entry point at the EMA and in a form of a two-legged pullback. So this is the new low. I'm going to reset the count and I'm looking for breaks below bars lows. You have a new low, first entry short. So this right here is a first entry short at the EMA. Very tempting setup had this been second entry short, but this is technically just a first entry short. So I want to see another bullish pullback, EMA rejecting, and I would like to see second entry short because this downtrend right now needs to get new extreme, and it never formed. A market already created new extreme. So right now what I'm going to do, I'm going to pause looking to sell. We have a break in new extreme, and my trend range bottom is getting confirmed. So right now I'm trading consolidation. I want to focus on buying low, selling high, downtrend played out. So let's see what's going to happen. I would like to see push above EMA and some distinct confirm uptrend or failed second entry short. Okay, it looks decent for the bulls, but price action quickly turned down lower, and we have failed second entry long. This is the correction, new high, first entry long, pullback, second entry long. Now, because EMA didn't hold here, and we broke back below, advanced trader can right now recognize, given how EMA keeps holding, that we may create one more push lower to test the support, and this is a failed second entry long, but because there is no downtrend in play, this would be a way more advanced setup, and you definitely want to make sure you have enough room before reaching these lows. So this is not fully easy high probability setup, but it makes sense for one quick little scalp. It's because we didn't stay above EMA here, there was not even a high low, we broke lower again. Okay, I definitely cannot sell anymore directly into these lows. And now we have, I'm going to zoom back, bounce off the support. According to range rules, I want to buy low, sell high. Because I expect around this price level, the more confirmations I have, the more I can trust it. Influx of buyers. Downtrend played out with the break new extreme. There was a little correction, another leg to new extreme. And you can see the bearish momentum is slowly dissipating. Now, this would have been great setup had this been legitimate fail breakout, because most breakouts out of trend ranges will fail. But you can see it still hovers around this important key level. It is a very nice bullish bar, definitely a solid bullish bar. You know, but the more I'm looking at it, the more I like it, because there's a big chance that a lot of buyers are going to step in here. So this is a failed breakout, potential high probability setup, but definitely you need to be once again a little bit more advanced because it is around this key level. Had there been a little bit stronger pullback lower, it is further from the EMA, would have been great, failed breakout. But hopefully it makes sense what's happening in the market. Uptrend, spike, move up, move down, EMA flat, resistance, support. So you want to buy low. Let's see what's going to happen. Okay, price action is trending to the upside. This is what I want to see. Every single time, I'm not sure if the trading range key levels are confirmed or not. I like to focus on the short-term channels and expect second entry short to get new low. So now I'm expecting second entry long. This right here is the new high. I'm going to reset the count. On the way down, I was looking for breaks below bar lows. Now I'm looking for breaks above bar highs. So we have a new high, first entry long, pullback, second entry long. And this is not only second entry long, this is also new low. This is the lowest low. First attempt to sell, pullback higher, first entry long, second attempt to sell, failure. And there's going to be break above this bar. So we have double high probability setup. This right here is a second entry long and also failed second entry short, which means I have more reasons to enter. It is very close to EMA. We pushed above EMA, confirmed the bullish momentum. This uptrend is new high, and because we have two hyper volatile setups in one great signal bar, this is the best trade for the day. Great hyper volatile setup, double hyper volatile setup. Every single time you have more reasons to enter than just one. Let's say you have second entry long combined with triple test, or you have second entry long that was also a failed breakout. Every single time you have more reasons to enter to confirm your analysis, you're always more confident and the setup has higher chance of success. So this is great setup. You have a lot of room to get out before this swing high. You have nothing to worry about. Great, easy, high probability setup. And you can see the market rewarded you with significant runner. You can hold a decent portion all the way up to these highs. Now, at first I was expecting push below EMA and a failed second entry long, but that's not happening. I can see the EMA rejected strongly. So this means, because the EMA keeps holding, there can be potentially a wider channel like this. It's just gonna happen. Okay, we're above EMA, so second entry long would make sense, but notice your new high first entry long, second entry long. Is this second entry long good second entry long to take? It is not, because notice how far away the body is from the EMA. It is barely touching it. It's not full at the EMA, and it is directly into these highs, into top of the trend range. Now I can move it a little bit higher, like this, but still it is far from the EMA, and you're buying at the top of the move. Buying here is great because the uptrend is starting, and now you can see I have some doubts whether there is key level in play or not. So I'm going to combine the key level in play potentially, because I don't want to go long into resistance, I don't want to sell into support, and given the fact how far from the EMA this candle is, only the tail is touching it barely, I cannot go long just yet. Okay, at first I was expecting failed second entry short, but we broke all the way down here, and now we can see we have triple test. And this was a very tempting setup, because I cannot go long above bearish bar like this. Remember, I'm a bull. I right now expect new high because EMA keeps holding again, and now I can see market giving me more information, and I can see the triple test. So once again, the more reasons you have, the better. Also would have been visual to like a pullback, but I cannot go long above bearish bar, and I cannot use this for double bar entry because the single bar is too big. My stop loss has to go below the initial bar, which means the stop would be just, actually the ATR today is quite low, but still would have been quite big. And once again, now you're buying directly into this resistance, and we prefer double bar entry to have the second bar high close to the high of the previous bar. You can see there's significant distance here, at least a half of the scalp was already made, and it is not a good sign for us. So not a great double bar entry. Ideally, we would like to see break below this bear bar, reversal up, and this would have been double trap, triple test. You expect new high. Great setup context wise, but didn't form that well. Now what I'm going to do, I'm going to mark my new extreme, and you can see it is starting to look a little bit more bullish, but because we were in a trend range, I'm still thinking we may go back into trend range eventually. Now, and I'm going to sell this failed breakout because EMA kept holding and it is quite bullish, but I may be thinking about possible lower high or failed second entry long, but you already push lower without even lower high. Okay, now you have new low second entry short, but once again, the body is so far from the EMA, not even tail is touching it. You can see there's a big gap, not even tail is touching it, big gap with the body and the EMA. So not a great entry for me to sell just yet. Had it been at least closer to the EMA, you can consider, but when not even tail is touching it, this is what we're using the EMA, and today is definitely a slow market, so you want the entries to form well, because entry like this, when it's far from the EMA, can be considered, for example, when you are trading a very strong downtrend. Sometimes traders, they confuse structures, they confuse aggressive entries when you're trading, for example, strong downtrend with a trend range like this. So this is not a strong downtrend. You need the setup to form great. Okay, we have a push higher, and now we have massive bearish rejection. This looks like a visual to like a pullback. Now we're bouncing off the resistance, the important key level. This downtrend needs to get new extreme, and this is much better entry at this point. Visual to like a pullback, uptrend is a break in new extreme, big bearish bar, closing below EMA off the resistance, decent high probability setup. And we already created micro double bottom. It was great, quick little scalp, 225, so we have one tick leeway. Now you already have micro double bottom. So let's see, now we have potentially what would have been a lower high, but you already have micro double bottom. The lower high is not part of the earlier swing, so I have to reset the count and treat this only as a first entry short. So I cannot sell, and also it is one tick away from being this treated as new low, so sellers can consider this as a new extreme, especially once we bounce above EMA. So I definitely am pausing, looking to sell right now. Every single time you see the count reset like this with micro double bottom or micro double top, it's not really treated as high low or lower high, rather first entry on its own. Okay, it looks like the sellers are considering this as new extreme. And notice what happened here, and this is extremely important, because what happened here is what can help you to predict what is going to be the directional bias of the market. This is what we call bullish imbalance, because if this is a healthy trend range, you expect for price action to go all the way down to the support. Okay, according to range rules, buy low, sell high, break new high, downtrend, break new low. Why price action is not even making it to the middle? We have series of higher lows. Bullish imbalance means every single high is higher and higher. There is empty room at the bottom part of the trend range, so you can see the trend range is not healthy. There is more of a bullish bias. This high low confirmed it. And when there is bullish imbalance, you're taking into consideration that the breakout may be successful, because according to range rules, most breakouts will fail, at least temporarily. We broke lower, pull back. We broke higher, pull back. So breakout pullback may be the pattern under bullish imbalance. So once you see bullish imbalance like this, you're not thinking about selling anymore. In fact, you're predicting possible bullish continuation. So this is how market gives us clues to help us predict what's going to happen. We have a new high for the entry long. I would like to see second entry long now to confirm at the EMA we're going to break higher and market continues to work higher. So right now it is clear what's happening. I'm going to take a look back. I'm going to project possible wider channel, because remember, there's always a channel being present on the chart. Actually, what I'm going to do, I'm going to draw it a little bit like this. Bullish imbalance, breakout pullback, uptrend is confirmed, multiple confirmations at the bottom, multiple confirmations at the top. So right now my job is easy. I'm going to be looking for reasons to go long, second entries longs at the EMA. I'm going to reset the count at each new high. We have a new high for a entry long. Can I get a second entry long? You have a second entry long here, but the signal bar is far from the EMA. I cannot take it. It worked this time nicely, but that's okay. Just because it worked in hindsight doesn't mean when you're watching this live you can take it, because it can very well pull back, stop you out. So you cannot go long here. It is against the rules. I'm still expecting the same thing. Nothing real over complicated. We have a new high, first entry long, and we have a second entry long. So this right here is a new high, first entry long, second entry long. And because EMA is holding again, now you may be thinking, hold on, this downtrend doesn't have a new extreme. There's actually a break and attempt for a new extreme. First entry short, lower high, attempt for a new extreme. Now the reason why I was confident taking this is because how big this second entry long is, and it's retracing too much of this downtrend. So the chances are extremely tiny that the market is going to go all the way back down, create a new extreme when you're closing so high. So this is a great high probability setup. I was ready to take this, but as you can see, it didn't fully trigger at first. There is no break above this bar, so I canceled the order. But once this bar was closing, because it looked very bearish, it reversed all the way up, and notice what happened in split second. Market continue working high like this. So I'm going to mark it regardless, because it is so borderline, and next time you will observe this setup, it will be a great setup with the trigger. And I noticed other traders on their chart had a trigger, so it's a great second entry long. Now we have overshoot, which means I can expect stronger pullback in opposite direction. But I have to ask myself, hold on, is this reacting as overshoot? Now we have another second entry long, but we have overshoot. I cannot really go long. Now there's a chance there's this brand new pattern developing, but it is not fully clear just yet. We're not fully at the EMA. What if we're going to have stronger correction after overshoot? Let's see what's going to happen. Okay, and because market created another leg up, it basically negated this uptrend, as this is overshoot for this uptrend. So right now this can sometimes happen. The market momentum will pick up so strongly, then there will be a brand new channel established like this. So right now I'm focusing on this steep channel, because after overshoot you would expect stronger pullback, some breakaway channel or reversal. That's not happening. We keep continuing to break higher. This tells me that there's a brand new uptrend developing like this, but we cannot pull back to the EMA with high probability setup. Now we definitely have overshoot even for this channel. So I'm definitely going to be expecting stronger pullback in the opposite direction because both channels right now have overshoot. So I definitely have to respect overshoot because remember, market cannot never go higher indefinitely. There's always equilibrium, push phase and correction phase. And sometimes traders, they get so lured into focusing on the most recent structure, they don't really put things into perspective that there needs to be equilibrium, push phase and correction phase. You can use a higher time frame to help you identify the fact that you're very far from the EMA on a higher time frame, because on a smaller time frame like this, it might not be as obvious that the market is a little bit overdone. But if you use higher time frame, you use 10,000 tick chart, for example, very similar to 5-minute chart, you can see you're far from the EMA and you can expect stronger pullback. Okay, you have a break in your extreme, downtrend played out, and according to our trendline rules, we expect new high for this uptrend, once again following simple trendline rule. So I'd like to see failed second entry short above EMA, new low for this entry short. Pullback, we have a failed second entry short. Unfortunately, it is below EMA. So, and I already see it is way too late. Had it been above EMA, had it closed a couple ticks higher, you could have considered. Of course, it is way too late. New high was created and market is about to close. So this is the overall structure for today. Was a very slow day at first, but you can see there are always few easy high probability setups. Regardless how slow the day is, there are always at least few easy high probability setups. This was really the trade of the day. You can actually keep managing the runner, and this second entry long was also great. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.